End of story, mic drop, end of
That's
podcast,
it.
get in, buy an index, walk away, and then retire in 60 years.
This is the Platinum Podcast.
Welcome, man. It's good to get you on the Platinum Podcast, mate.
Yeah, thank you very much. It's actually quite nice to hear it. It's very different to the two podcasts I've done before. So it's quite nice to be here.
Yeah. Well, what podcasts have you done before?
Well, I was a resident. Well, I set up the eToro podcast, and then I also set up a podcast with myself and my business partner Ben Sparham. So I've been doing podcasts for about 2 years now, nearly.
So it's nice to be on the opposite end of it then.
Yeah, it's quite nice to be being interviewed rather than someone who has to come up with stuff and it was edited and make sure then you have to go and do the research and make sure that the stuff you're spouting is well, I need to check that. You just said something. Is that true?
Am I talking shit? That's basically. I don't do any of that, so I could be talking shit actually. So for anyone listening right now, I've done no research. I don't know what's going on. I'm actually just sat down, just having a bit of food, and now here we are having a podcast.
So, winging it.
I wing it. To be honest, I'd say it's within my skill set. I think it's something that I'm quite good at, winging it. I mean, hopefully that's the case for this podcast. I mean, if it's not, I mean, you can just turn it off and go fuck myself.
Well, because I sort of know what I'm talking about, I would always have to do a script for the other guys. So they said that I have to give them a bullet point so they can actually chat about and stuff. And then all of a sudden they say something, you're going, oh, I need to mark that down. What was that? About 22 minutes in.
Actually, what I need is like a Joe Rogan style. I need Jamie. I need to get Scott in here, actually, so he can be sit there and every time we chuck out a fact, he can just Google it and see if it actually makes sense.
Yeah, so it's live. You're going, no, that was lies, guys. Okay, no. All right, fair enough. Yeah.
Entirely possible. But so for anyone that doesn't know, I just want to give a little introduction for the man that is Henry Ward here. He's been doing a bit of work with Platinum University Royal. He's been one of our mentors for quite some time. And he's a bit of a legend of the investment game. I mean, let's face it. I mean, you've been doing some pretty serious numbers. I know you're quite a modest guy, but you've been doing pretty serious numbers for a while. You've been trading, you've been involved in stocks for a hell of a long time, and you've been dropping some serious values to our members for quite a while now, Mr. Ward.
Yeah, so I trade stocks, I trade FX. I dabble in a little bit of crypto. I didn't get caught up in that massive hype up to 64K. Whereas the drop, I started dollar cost averaging into the drop because I can now see it going back up to the 64K. And when I was down at 30 grand, I see massive investment. And it's the same with the stocks. Is that I had a portfolio with eToro, and just before the coronavirus pandemic, we generally get a correction in the market anywhere about mid-January to mid-February. That's generally when we get a correction. Now, when people talk about correction, they get massively overzealous with stuff like this. So a 10% drop in the market is just a phase two. A 20% drop in the market is just a standard pullback. A 30% drop in the market is called a crash. Now, once you see two red bars on, say, the NASDAQ or the S&P, all you hear is, oh, there's red in the street, there's blood in the street, oh, it's a pull, it's a crash, it's, Henry, should I jump out on my stock? Should I not? No, absolutely calm, stall the beans, you know what I mean, everything. So I was expecting a pullback back then, and it came a fraction later than normal, and it came down 10%. And then the next day, it had a big, huge red bar. Okay, and at that particular point, I closed all trades except the likes of Apple and Microsoft. The only two stocks that I held open. I had about 50 stocks, closed everything. The market dropped another 22% down. I dropped about 30%. 32, I think, was the full drop of Corona. And then started buying my stocks up again. And that's all that is just experience, because I was expecting the market to drop. Now, under no circumstances did I expect the coronavirus pandemic to kick in and have such a massive hit. But I knew that once it went past about 10% at this particular time of the year, because you have hedge funds rebalancing their books, taking profit, you have people, and the idea is that a lot of people rebalance everything. You then have the NASDAQ, the S&P are rebalancing theirs. So anyone who left the NASDAQ or S&P and the new people that come in, they're buying up new stocks. So there's a big rebalance that happens in January, and it generally waits till mid-January because you have the earnings report that comes out on the 15th of January. So that's it. And it's just trying to get this knowledge across the people, because how would, for instance, before you got into this, Joe, how would you know that?
Before I was involved in this, before I had the absolute privilege of being educated by the likes of yourself and Mr. Tom Williams, who we've also had in, I wouldn't have known about this.
Yeah.
Predominantly because we're not taught this in school. We're not taught about how money works. We're not taught about market cycles. I was actually going to touch on what you said there. It's interesting, the fact that a 30% is considered a crash and it's like game over kind of thing. And it kind of is a testament to this kind of clickbaity kind of world we live in, where people just read the title. There's no content, there's no context, no background. And then everyone just kind of, the amount of people I've had to meet going, yeah, but why are you in crypto? There's going to be this crash. It's like, yes, there is. That's okay. It's
if there's a crash, yes.
Fantastic. It's just the way it goes. Once you understand that, because everyone that doesn't really get it, myself included, to like kind of answer your question prior to me being educated by the likes of yourself, I would have fallen into that category thinking that this is just some like extremist event, but it's not. It's just part of the game. And once you understand it's part of the game, you know the rules, then you can start playing accordingly, right?
I hope you guys are enjoying this episode of the Platinum Podcast, brought to you by Platinum University, the real-life school of mindset, online business, and financial independence. Platinum University teaches you everything conventional education didn't. We're helping thousands of people create multiple passive income streams that create more money, time, and freedom. We literally guide you through every step of the process with the help of our in-house experts and our powerful, like-minded community groups. To get 35% off your monthly subscription and permanently lock in the discounted price of $39.99, and also get access to all of our mindset, Forex, dropshipping, stocks, crypto, network marketing, and Airbnb content, visit the link in the description to join.
Yeah, I see all the memes about crypto as buy it to dip, and then you see a week later another meme coming out. I bought the dip, but kept dipping. And then, I bought it the next dip and it's still dipping. Well, that's exactly what you should be doing. You should be buying it a dip. But the problem is that people are uneducated, okay? And I don't mean that in a bad way. They just don't know what they're doing. And the problem is that I bought some crypto at, I think it was about 45,000. It was a nice horizontal level there. It come back and retested. I was happy with the level and I bought it. Now, when I bought it, it went up slightly and then it dropped. Now, the next level, there was a nice horizontal level. I think it was at about 40K. So I had another entry at 40K and bought there. Now it went up a little bit and then obviously again, it dropped again. So then I had another level, the 30K level, and I had an entry at 30,500. So I got triggered in right there. And then it just stayed there sideways for about 2 months. And now it took off, which means now all my positions are now up, whereas the last one is literally a break even. It's up a pound, it's down a pound, it's up a pound, down. So we're flitting around there at that price there, and that's the difference. What I did is I dollar cost average down at key levels. So I don't know whether the market's going to drop 10%, 20, 50, 100%. I don't know. But what I'm going to do is I'm going to have key levels. So my next entry was already set at 20,000. So if it had broke the 30 and went down to 20, I would have bought up again. And that's the idea. So I'm scaling into the position, which means I have an order here at 45. I have another one here at 20, which means then the market only has to go up halfway for me to be actually break even when it turns. And that's the idea is dollar cost averaging in. Or I see a lot of people with red stocks. So obviously myself and Tom call stocks, and unfortunately we can't get every single one of them right. Now, there's a particular reason why we have picked that stock. Now, and once a stock is red for maybe 2-3 months, what I do is I have a look at that stock, I rebalance, I have a look at it and make sure that one, it's still there. The reason for me taking that stock is still there. Two is the fundamentals. Is the earners report still making money? Are we expecting them to still grow? Has the trend changed? Now, if all of those things are a no, I will then jump out of that trade. I will literally cut my ties, and it doesn't matter how much I'm down, I will cut my ties with it, because that money there is much better invested in something that is trending nicely. And I will start earning money on that straight away, rather than sitting on this red trade. Now, if nothing has changed and it's just that the market has disagreed with it. So for instance, we had coronavirus down, we had the travel ban, so all them dropped. Now, once we start traveling again, those stocks will take off. If they can survive, they will take off again. And that's just the way the market works. So if that stock is red and you're sitting on it and it still has the same outlook, what I would say is then buy some more. Now, the ideal scenario would be is if you risk 100 quid here, you buy another 100 quid's worth of it down here. So your dollar cost averaging in. So you're averaging into the position. So the idea would be is that it only has to go up halfway for you to get anywhere close to break even. And that's the idea. But if the fundamentals, the underlying and the trend is all changed, then you're better off just cutting your ties and just getting out of it. It's similar to what I did just before the pandemic. I cut everything. The only two that I didn't cut was Apple and Microsoft, because I was up 100, maybe 120% respectively on those. And I knew they weren't going to come back. I knew I wasn't going to be a red in either of those positions. So then once the market dropped, I bought up both of them again, scale into them.
So you just kind of make it a game of staying in the green, essentially. And the way to do that, I mean, which it sounds pretty sensible if you ask me. It makes a lot of sense.
But that's the idea, is right? Your money is better working for you. Now people ask me all the time, is Henry, how do you see these stocks? Now, I'm actually just going through a little watch list. So I run courses every so often. And in those courses, I teach people how to scan markets. I teach them how to actually pick up trades. So one of the things that I do, and I'm a lazy bastard. Okay, one of the things that I do is I get everyone to pick an exchange. So just say there's 10 people on the course. I'll get 10 people to pick an exchange and then go through every stock in that exchange and put them down as hot. Okay, I don't want anything else. I don't want medium. I don't want stocks that are trending sideways. I only want hot stocks. So that means then by the time we do the next webinar, everyone has all uploaded their stuff onto the platform. And I said to make sure you put the likes of a Google Doc, which gives everyone access to it. So which means then I can copy and paste yours, you can copy and paste it, and then you can copy and paste mine. And all of a sudden then all 10 people have every stock exchange hot list all done there. And it means then that straight away, you're not listening to Henry, you're not listening to Tom, you're not listening to the stock guy that you're watching on YouTube. All of a sudden, you guys have come up with a hot list that you guys have looked at. All you have to do is make sure and check the other ones and make sure they meet your criteria, and literally just trending. And sometimes two sets of eyes are better than one. And people ask me all the time, how do I pick my stocks? And it's literally by doing this. And I was on the webinar, not this Tuesday, the Tuesday before, and someone goes, "Oh, Henry, can you have a look at Ashtead Group?" Now, Ashtead Group, never heard of them before, no idea what it was. I was actually looking at my hot list today, and they're on it, and I didn't even realize they were on it. And from the webinar, I'd done no analysis, no nothing. Someone said, "Oh, Henry, do you think this is a trade to take now?" And I looked at it, and I was like, literally looked at it for about 4 or 5 minutes, met all my rules, and took the trade live straight there. In 4 days, it had now gone on and hit my 3-to-1 take profit. And that was live on the webinar. It was a free webinar that I'd done, in, out, took profit. And people are like, "Wow, Henry, what happened there?" This was a CFD trade. It wasn't the underlying asset. And it literally just took off. And that's how simple trading can be, is that an extra set of eyes showing me and asking me, "Henry, can you have a look at this?" made me money. So it's like, I love doing these webinars, not only because I'm teaching, but because you guys make me money.
Well, we're happy to help, Henry. What can I say? There's two really like important things that I heard and all of that I find really interesting. So like the first part, like going back to your Bitcoin example, and the stocks as well, is that when you're dollar cost averaging in, you're doing that because you ultimately think that things will go up long term. Essentially,
Yes.
all of that, you're able to do all of that on the understanding that things will go up. Now,
Yes.
the thing that's really interesting, specifically for new people, like we briefly touched on how you get caught with, it's a crash, it's dropped by this, it's all over. That's all kind of bullshit, essentially, because time has shown that over time, the stocks go up, right? Unless the company crashes,
Yeah,
right?
but the thing about it is that if you look at the Nasdaq, the S&P, the Dow, the German DAX, the French CAC, FTSE 100, they're all the indexes that belong to the countries. Now, if you look at them, they have all gone up since the day they've opened. End of story, mic drop, end of podcast, get in, buy an index, walk away, and then retire in 60 years.
Or leave it in an ISA or a savings account and get yourself a real nice 0.1% a year. Which won't beat inflation. And then just die lonely, sad, and cold. How about that?
You say that. I have a confession to make.
Come on, what you got for me, Henry?
I have 20 grand sitting in a cash ISA, just sitting there, absolutely doing nothing. And I was just thinking about it last week, and I'm now in the process of getting it transferred over into a stocks and shares ISA. So the idea, the way I work is I like to have 20% of my cash there sitting in the bank, that if anything happens, that I can actually get my hands on it. Now, obviously, my 20% that was in the account has grown there. So I just put it into the cash ISA, and it was just sitting there. So what was it, a month ago, I was looking at it going, well, that's gone quite big. That's bigger than 20%. I need to get rid of that cash ISA. I think I've had the cash ISA for a year and a half. I think it's maxed out at 20 grand, and I think I have made £26 profit on it.
Wow. Okay, cool. What are you going to do with that in retirement?
That 26 quid. I'm really buzzing about that. So yeah, literally getting out of that and putting it into some stocks now very, very shortly, and then putting a little bit into one of the copy portfolios there. My business partner Ben, so he's actually going to be trading some of it. So the idea is to just diversify the portfolio a little bit. I have my trading, he has his trading. I copy someone else. I also have some crypto stocks, and the idea is just to make sure you have revenue streams coming from everywhere rather than just one place, and that's it at the end of the day.
Platinum University in the ethos that we have here, Mr. Ward. That's what it's about. Yeah, all of those revenue streams. What you touched on there, though, is really important. I really want to highlight that, because what you said there is, yes, you invest your money because, like, in stocks, etc., and different assets, because you know this is how you're going to get wealthier over time. But you also have some cash reserves there,
yes,
right? And this actually allows you to have the strategy you want. Because we see this so many times with people. So they spend their rent money on a stock that some dickhead on YouTube's recommended. And now it's dropped by 10, 20%, which, as we've just established, is perfectly normal. But because you're in a position that you can't hold because time is not on your side, now you need to pull the money out. Now you've lost when long-term you potentially, or more likely would have won. You would have won if the all prior records are anything to go by, as you just nicely stated. But because you put yourself in a position where you can't afford to wait, you've taken away your options. And now guess what? You leave yourself skin. So to actually have some money there as a reserve, which is a just in case fund, which allows you to leave your investments and keep them safe, that is so, so powerful.
Yeah, but at the end of the day, that's the difference between an actual investor and someone who has no idea what they're doing. So just to give an example, so if we look at, say, the NASDAQ at the beginning of the year was up at 13,888. Now, then by March, it had actually dropped down to 12,290. So that's a 30% drop, 20 to 30% drop there in the market. Now, the problem is that if someone is new that's come into investing at that particular time, all of a sudden now I always only ever risk 1% of my capital per trade. Okay, which means then I move money around the whole heap of trades. So I only ever risk 1%. So which means then if the NASDAQ drops for me, I only risk 1% of my capital. But the problem is with new investors, if they put 10 grand into their trading account and they go, oh, the NASDAQ, Henry's told me that the NASDAQ makes on average about 20 to 25% a year. It's a 15% a year over the last 10 years. So if that makes 15% a year, I should just buy that. And all of a sudden, then you see a drop 30%, and they would end up putting in 5 grand or even the whole 10 grand into that one trade. Now, the problem is that you're not used to seeing your money drop. So your 10 grand has now gone down to 7,000. And you go, oh, what's the missus going to say? Oh, no, I didn't tell her that I put this money in, or all of a sudden, oh, if mum...
Fuck you, Henry. Fuck
yeah. If mum knew, what would she say? Oh, no. And then you start panicking, or what people do is they go and get credit cards and they actually get the balance on the credit card, put it into that. And all of a sudden, you're now, one, paying off a credit card, and two, you're down 3 grand on your investments. And you all of a sudden then the market, you jump out of the market. But if we now look at it, the NASDAQ is now, so it was at 13.8, it's now at 15.6. So which means is a 20 to 30% run on the investment, which means there that if you had sat through that time, you now would be 20 to 30% up. And that's the difference in the market. The market goes up, it comes down, it goes up. It's like the waves of a sea. So when the tide is going out, the waves still come in, but they go out further than they go in. And that's all that happens. The market runs the market. The idea of the only goal for a stock. So what's the only goal for a stock?
Get more money out of it. Earn money.
Earn more money than they did last month, last year, last week, last minute. And that is the only goal of a stock, to earn more money. And if a stock continues to earn more money than it did previously, it is going to continue growing. And that's it in a nutshell. So what you do is you find companies that are earning money. And once they do that, it's just a win-win situation for everyone. It's just one of these things that we just need to crack on and just learn. It's quite simple. And FX is a little bit different because FX is a sideways market, okay? And I know you guys love trading sideways markets with the likes of gold and silver and stuff like that there. And FX is a sideways market because it gets manipulated by the governments. You have the quantitative easing, you have all that inflation. So the idea is the FX is to not have stuff that you're buying in the grocery shop that it's not too expensive. But then you don't want the GBP too strong that you can't trade export or imports, because if you buy something with GBP, it's going to cost the guys that you're trading with, because the GBP has gone so strong against, say, the Turkish lira or the rupee or the South African rand. It's actually not worth their time doing business with you because it's too expensive at this particular amount of time. They're not getting a good enough conversion rate. So, and they're trying to keep it between those two markets. So the idea of the stock market trends 60% of the time. I'll say that again. Stock market trends 60% of the time, and the foreign exchange literally trends 20%. Okay, so it's easier to trade with the trend in a stock market than it is in a foreign exchange. But again, there's still money to be made in the other markets. It's just they take a little longer and a little more skill set, if that makes sense.
Yeah, I mean, that does make sense to me. So am I correct in saying, obviously, as you just described there with FX, that's why there's obviously such drastic fluctuations. It's always a little bit all over the place. There's a lot of moving. There's a lot of variables. There's a lot of kind of short-term deciding factors. Whereas
Yes.
with a business specifically, I mean, we'll use Apple as an example. Do they make good phones? Yes. Do people buy their phones? Yes. Are their laptops also good? Yes. Are they continuing to branch out and dominate the market? Yes. So what's logically going to happen? The company is going to keep progressively earning more money. The stock's going to continue to increase. Let's all jump on the train, right?
Absolutely.
That's kind of that's the difference. And then with FX, it's a juggle between, is it a good time to buy? Is it a good time to sell? Is it a good time to trade? Is it not? And this all fluctuates based on every political decision that takes place, every
Absolutely.
announcement.
You have Brexit, you have now coronavirus. You need to watch and make sure that you understand what's going on with coronavirus. You then need to look at what the other countries are doing. Now, you also then have to look at US dollar, what the unemployment rates are there, how is that going to affect us? Because remember, US dollar is the biggest currency. So once something happens there, it's a ripple effect to the rest of us. So if the likes of the US dollar gets a cold, we have a runny nose, if that makes sense. And that's the idea of it. And then you have to make sure the jobs data, you have to look at the CPI sales, you have to look at all this other stuff in what the ECB is doing, what the chairs are doing, whether the Federal Reserve, the likes of the ECB, what are all those announcements coming out, and they massively affect the market. But again, it's much easier to trade stocks than it is foreign exchange. For example, is that it trends 60% of the time. So if you buy something that's trending, it has a 60% chance that it will continue trending.
I like those odds. I'm not a mathematician, but I would say 60% probability of prediction is far better than 25%. Would I be right on that one, Henry?
Yeah, it's hold on, I get the calculator. Yes.
Fantastic. So I am a mathematician. It turns out I am really good at
maths. Absolutely.
Yeah. See, me personally, I've never been a trader, right? And luckily my business partners are. I'm not in charge of the Forex department, guys, just so you're clear. I'm not manning that shit. We have experts that take care of that. I'm also not an expert in stocks, and Henry Ward is on charge of that shit, thankfully for you guys. But yeah, the trading side of things just doesn't do it for me, because I know psychologically I have a very addictive personality. I get very obsessive about things. And one thing I see with the whole Forex game is, like you say, there's those drastic fluctuations. It becomes one of those things that kind of dominates your life. And it's a weird one to me, because what you're saying right now makes so much sense. And I really feel that the reason why so many people gravitate towards Forex is it's because it's got that more young man's game kind of vibe to it. You get your standard knobheads that are pretending they're multi-millionaires, renting out Lamborghinis, and pretending that they're super duper Forex traders. Whereas stocks is almost seen as like the old man Warren Buffett kind of game that doesn't really kind of get the same traction, which is actually ridiculous, because I think it's really important to change that perception for people.
Well, see the thing about it is that foreign exchange is traded as a derivative. Okay. Now, I know we're gonna lose a lot of people here now, but you have
break it down. What is a derivative, Henry?
You have underlying and you have derivative. So the underlying is where you own the physical asset. Now, you can only buy underlying now on crypto now, which is a little bit of, because it doesn't actually exist. But again, okay, so you buy the underlying asset in crypto, you buy the underlying asset on a particular stock, you can buy the underlying asset on gold and silver, but you never own the underlying asset with money, because the government actually own the money. So you never actually own the physical money. Even though it's in your wallet, you do not own that. The government can recall that at any time. Okay, so that is the government's money. So the idea is that we have to trade it through a derivative. So a derivative, basically, very simply put, is a bet between two people. One person is buying it, the other person is selling it, and at the end of the time period, someone is going to win. That's it. That's basically what a derivative is. So it's a contract on the fluctuation or change between two parties on a particular asset, and you do not own that particular asset. So you never own it. Now, so foreign exchange is always traded as a derivative. Now, you can go and trade stocks the very same way as a derivative. Literally, that's how I trade stocks. I trade derivative and I trade underlying assets. So the underlying assets are held long term. The derivatives are in and out short term. So I trade the likes of Ashtead Group. I trade the likes of the NASDAQ, the S&P, the Dow. I'm in Morgan Stanley at the minute with 2 trades on them there as a derivative. And they move the very, very same as a foreign exchange. But remember the stat I told you, the foreign exchange trends 20% of the time, whereas a stock market trends 60% of the time. So without knowing anything else about the market, which derivative has the most likely chance of making me money?
Stop.
Absolutely. And that's it. So you don't necessarily have to trade stocks short term. You can trade them as a derivative. But remember, if you're ever trading as a derivative or a CFD, so derivative is a contract for difference. So the idea is you're taking out a contract on the difference change. Okay. So that's what a CFD is. And you can trade at the same as foreign exchange, gold, silver, any of those. So it just means that it moves quicker in a particular direction, but it's two people taking a bet. Generally, there's one person on the sell side, there's one person on the buy side, and the broker matches the two people up. And then when one wins, they pay the other. And that's the simplest way to explain what a derivative is. But again, you can trade that the very, very same way as the foreign exchange, the same way as oil, the same way as gold, any of them. And it just means that it's an easier market to trade in that sense.
Okay, so give me on that note, because we need to make stocks cool, right? So because more people need to do it. So give me one good reason to choose Forex over stocks just before we move on to why stocks should be the answer.
To pick Forex over stocks?
Give me a reason.
For stocks over Forex, there's loads of them, but Forex over stocks.
No, other way around. We'll get to that. I'm teeing it up. I think it's quicker.
Forex over stocks. There's no. I don't see any reason why anyone would trade Forex over stocks.
The Forex traders on Instagram seem to have nicer watches and cars.
Yeah, but
they have hot girls.
Has anyone ever actually seen the FCA actual ad for the likes of those? So the FCA actually did a proper ad. I'm a Forex trader, and he's standing in front of his Lamborghini, and he has his iPad, and he has his Rolex and stuff like that there. And then the caption goes, "You should not believe everything you read." And all of a sudden, then they show the actual reality. And the reality is that person is standing in front of a green room. His foot is on a box, and it's that they superimpose a Lamborghini in the background. And it just looks like he's actually standing there with his foot on the footwell of his Lamborghini. It's not. It's actually it's all done by CGI. It's all done by green room. And that's the problem. So there's so many scams out there. Anyone who follows me on Instagram, so henryward.trading, will know that there are so many scams out there. Literally, if you look at the Instagram now, at the minute, there's a fake profile that has Henry with 2 R's. And then that's there's a Bitcoin miner wanting someone to come and invest money with them. So the idea is that yes, you can make money from Forex. And I do. You can do that, but it's just hard. You have to put much more time and effort into this. The equivalent is giving up a day job to start becoming a trader, and that's the problem. And then you're giving up one job for another, and then you end up sitting 6 to 8 to 12 to 15 hours a day looking at your screen, because with foreign exchange you can trade 24 hours a day, 5 days a week. So, but it means the only plus side is that there's never a dull moment. You can trade at any time during the week at any hour. So that's the only plus to it. You can trade at any time.
Which is almost a kind of dangerous concept in and of itself, right? Because the very nature of trading is you kind of want to remove your emotions from it, right? You don't want to get into this kind of fear, kind of greed mentality. And if you're opting to get into it for a buzz, that's where the whole gambling mentality comes in, which can be so dangerous in this space, right?
Oh, absolutely. I know loads of traders who quit their day job. Now, when I say traders, I mean professional traders. Now, I'm not talking about normal Joe Soaps who give up their job and then try trading for a couple of months and then have to go back to their job. I mean proper professional traders who've traded long term. And this one guy in particular, what he did is he gave up his day job. He went and started trading, and he started trading 4 or 5 hours a day, and he was making good money. Then it turned into 10 to 12 hours a day. Then it turned into, he ended up getting a fridge. So his room was upstairs. So he ended up getting a fridge in his trading room and putting it there, which meant that he didn't actually have to leave his room to go and get some food, because he had some food, he had drink, he had everything there in the fridge. And it meant then that he was now trading 15 to 16 hours a day. The guy started losing hair, he was going gray. All of a sudden you'd never see him. It was the only time to see him on the weekend, because he's now trading every hour God sends and wouldn't reply to texts is the, and he done this for 18 months. And I swear to God, he put 10 years on his life. Yes, he made money and he made really good money, but it wasn't worth it. The idea of trading is to make it passive, which means then it complements what you're doing. And the idea is to be able to walk away from your day job as it is passive. And that's the idea, not to turn from one job into another.
Totally. So, I mean, for anyone out there, as soon as you get yourself a sex robot in your bedroom, because that's where you want to trade, that's where you want to be drawing the line. I think that's hugely important, right? Because my stupid joke aside, of course, but like, you're not looking to get a job realistically, are you? I mean, I know from the investments I do, I'm not a trader, I invest, I just look for long term. And it's because I have no interest in sitting there in front of the screen working out what's going on. I want to know enough that I can make some projections long term, good enough for me, right? Because I want it to complement my life. I want to spend more time doing the things that are important to me, things that I enjoy, that I find fulfilling, etc. If you enjoy trading, absolutely fantastic, but have a clear intention with what you're doing. And I think that's where so many people get lost, right?
Yeah, it's just one of those things. And just to give you an example, okay, so this is I read a lot of trading books, and it's something that was come up on the trading book, a little stat. You know the way little stats come up and you go, oh, that's pretty cool. Now, my little girl, Linda, she's 14 years of age now. Now, when she was born, I put a few quid into, say, the S&P index fund, so a little tracker fund for her, and I put a little bit of money every month into that. Now, I don't put huge amounts of money into it, but a little stat that came up is this: the day you were born, okay, if you put $5,000 into an index tracker that tracked the S&P, so the S&P 500 is the top 500 stocks in the US. And it returns over the last 40 years, 10.2% a year over the last 40 years on average. So if you put that $5,000 into an index tracker and it returned 10% a year, by the age of 55, my little girl, for instance, Linda, my little girl would have £1 million in her trading account at the age of 55.
And that just kind of puts it in perspective.
That's a nice little pension fund for her that she never knew she had, isn't it?
It's not a bad way to go. And it's simple.
And that's by putting $5,000 into her trading account the day she's born and letting it mature to the age of 55. That's not putting in any more money. That's not doing anything. And then that is everything is equal and the market continues doing what it's doing. Now it's done it for 40 years. Why would it change today or tomorrow? That at the end of 55 years, she would have £1 million in her trading account. And that's how simple trading can be. If you put an ISA, so you have stocks and shares ISAs. So if you put 20 grand a year into your stocks and shares ISA, and that returns 10% a year. So we'll just bring the numbers down again and just say 7% a year. In 21 years, if you max your stocks and shares ISA out every year, in 21 years, you'll have over £1 million in your trading account at 7% return. So it's simple enough to get to that £1 million mark. It's just it's slow and steady. Remember when we were kids, we heard the story about the hare and the tortoise. And the hare runs off and the tortoise, the two are running at the same time. And the hare is so quick and he's so confident. He starts talking and he ends up trading. Yeah, he ends up losing the race. Why? Because he's so confident of him winning and gets distracted that the tortoise is so tunnel vision that he gets there. And that's one of the things, is that slow and steady wins the race every single time. It annoys me when I hear people going, Henry, you haven't traded crypto yet. Henry, you haven't traded crypto. Why are you not in crypto? What's going on? Why are you not in crypto? Because a lot of people that are in crypto, yes, when I went up to 64,000, they were making money hand over fist. But when it come back down to 32,000, they're in the red. Now, it's now come down and I started buying on the way down, which means now I'm in crypto and I'm better off than you sitting on that money for 3, 4, 5 months, whereas I got in as it's turning. And that's the difference. And that's all we're looking for, is the timing of stuff. It's not that I don't like it or anything like that. It's that I'm waiting for the correct time to get in. And that's all we're looking for. Make sure you get in at the correct time. You have a little bit of tunnel vision. And once you have that, it's unbelievable. The power of letting money work for you is unbelievable. It's the problem with everyday Joe Soaps or Joe Moores. Yeah, they think time equals money. Now, time does not equal money. Okay. The thing is let money work for you, and money working for you will grow exponentially quicker than your time versus money. Because remember, you only work 8 hours a day. You sleep for 12 hours, whereas money will continue to work during those 12 hours you're asleep.
You're fucking sleeping 12 hours a day, mate. Gee, how do you get anything done? Jesus. Henry Ward, you're doing too well at trading, I must say. Far too well if you're sleeping 12 hours a day. You need to book that schedule up. We have to get you on more podcasts, mate. More webinars. We need you in. Get that work rate up.
Absolutely.
I think what you said to this is so important, and I think it's something that people really need to hear, because the thing out of all of that, right, out of everything that you just said, absolutely amazing value. You basically told everyone how they can become a millionaire within their lifetime without doing anything, essentially. Yeah, everybody in their lifetime will have £5,000 that they can put away and leave. I'm sure everyone is capable of that, right? So there's no exception here, in my opinion. Now, why at no point in my education was I ever told that I could do that by anyone at any point, anytime?
Because even at my time, so it's I'm told to get bricks and mortar. I'm told to go and get a house. I'm told to get a house, get married, have kids, and enjoy your life. Well, if you get a house and you have kids, okay, forget about the married part. Are you going to enjoy your life?
I mean, I've got a flat in the UK, and it's doing absolutely nothing for me. I know that the mortgage on that is not doing me any favors at all.
But that's the thing, is that people then have to worry about the mortgage, making sure that's paid every month. They are then tied to their job because they have to cover the mortgage. Then say you have 1 or 2 kids, you have to put food on the table. You have to make sure they're clothed. You have to make sure they're going to sports. You make sure that they're friends. They're not little shits. You have to make sure. And the problem is that you're putting pressure and pressure and pressure and pressure on yourself. Whereas if you're taught to go out, get financially stable first, and then have kids, or then have a house, and then do that. But the problem is that for me personally, I was 25 years of age. I had a child. I was engaged. I had planned permission for a house. I had a mortgage set up, and I had a business that was running. So I was a qualified carpenter for 10 years. And that meant that in Ireland, at 25 years of age, I was ready to retire. I was done. I had completed life. It was finished. Bearing in mind, I'm from a village where there's 2 pubs. We have a church, we have a graveyard, and we have fields. And that's it. That's where I'm from in Ireland. And I was done. I completed life.
Graveyard sound like the highlight there, mate.
Yeah, everyone's dying to get into it.
the waiting list was quite large.
But the thing about it is that was it. And then all of a sudden, then things happen. Your life throws you a little curveball, and all of a sudden, then the housing crisis happened, which to me at the time, because I had my business, I had 4 guys working for me. Then I was trying to keep that afloat. Money then got tied up in that. I didn't have any money at free capital at that time to invest into any property. So for instance, this is when a crash happens. So it doesn't matter whether it's on a stock market, doesn't matter whether it's on the housing market, there's always an opportunity, and all you have to do is be ready for that opportunity. So for instance, when pandemic happens, I was able to get Apple 30% cheaper, Google 30% cheaper, Amazon, Microsoft, all 30% cheaper. Now, in the pandemic in Ireland, in Mullingar, now Mullingar is about 40 minutes away from Dublin, and the builder had no money to finish off the housing estate. The housing estate was 3/4 finished, and the bank come in. What they did is they actually finished off the houses, and they sold the houses at cost price. So there was 1-bedroom apartments in Mullingar, 45 minutes away from Dublin, going for £7,000 for a 1-bedroom flat. 2 beds were going for £14,000, and the 3 beds were going from 21 to 28,000 pounds, and this was in the absolute bottom of the housing crisis in 2007, 2008, 2009. So in that time, so that was when the bottom of that. And all of a sudden, if you were anyone who had a bit of money at that time, or even had a stable job, if you went and you bought one of those, you're laughing, absolutely laughing. Now, even if you just rented that out, and you didn't live in it, all of a sudden there, opportunities presents itself once you are set up properly. And that's it. You don't over leverage yourself. And that's one of the things that most people hear. So buying bricks and mortar is good, but buying bricks and mortar at the likes of this at the bottom is really, really good. But you never buy bricks and mortar at the top. Why? Because then interest rates go up. You're paying more on your mortgage. All of a sudden, the property depreciates. And then people say to me, Henry, but I'm renting is dead money. But if you have bought a £500,000 house and the price of that house in the space of a couple of months is after dropping 50 grand, you're better off renting for 2 or 3 years and you still haven't paid 50 grand in rents. You're better off renting for 2 or 3 years than sitting through that depreciation of that mortgage that you have just paid, you've paying off. So you're literally paying off 50 grand for nothing. And that's one of the things that people don't understand, that make sure you're doing it at the correct time.
Yeah, I think timing is absolutely everything. When you're essentially with the housing market, the same as any other market, you're just talking about buying the dip. I mean, those prices that you're talking about, those flats, that's absolutely ridiculous. If you're in a position to do so, you could just set yourself up for life in a matter of you could just buy up 5 of those realistically for 7 grand a pop. Most people that are doing all right could probably buy up 5 of those and just be like, all right, cool, that's a worthy investment. I'll leave that for the next 10 years. But
the housing estate I was working on was in Kildare, just outside Dublin. And the very first house they sold was 850,000 euros. Then they took it, they didn't put another on the market for 4 or 5 months. The next one went for 1.1, 1.2. And then by the time they were selling the last house, it was actually 1.9 million. And they literally signed, sealed everything. And we're about 2 months into the crash, but they were still working, everything like that. And then the last house that went on the market, it actually went on the market for 1.2 million, but they didn't put that one on the market till the guys had completed the house before. So, and that's the difference. It had dropped 600,000 in the space of 2 days.
That is absolutely insane.
But it's shocking. But that's what happens in the market sometimes, and you just have to make sure you don't do that. Now, those houses now are probably worth more money now, because that has now gone on, that the market has now gone on bullish again. The country is going well, the economy is going well. But in that time, those 3 years, if you had lost your job in those 3 years, all of a sudden you wouldn't be able to pay that mortgage. Then you have debt collectors coming on, then potentially you have bankruptcy, stuff like that. So the idea is you don't over leverage yourself. Make sure you have a pot of cash. I would say to anyone, if you're buying a house and just say you're putting a 50 grand deposit down, you also have another 50 grand savings there for yourself if anything happens. So always have the same amount of money as your deposit left to one side to carry on and live your life as normal. Because if you lose your job in the morning, that means you still have a nest egg there to continue paying, you can continue doing. And then if it means that you stack shelves in Tesco's for the next 2 or 3 months till you actually get the job that you want, it's not covering everything, but it covers 3/4 of your wages. It covers 3/4 of your outgoings. It keeps your savings relatively there without dropping into them. So it's about getting in at the right time. And sometimes when you're ready is not the right time. Sometimes the right time is sitting on cash, or investing in a stock market, or investing in the housing market at the right time. It's just sometimes sitting on cash is better. But again, we will only know when we press the trigger and buy, that in the next 2 or 3 years afterwards, then we'll find out whether it was correct or not.
No, and this is the information that people should be getting from an early age, in my opinion. And we're not educated in this respect. We're not given this information. I personally believe there's a lot of reasons for that. I won't go too far into the conspiracy route, but I do think it's set up in a particular way. And this is why it's so important to have people like yourself available.
But who taught you about money?
I read books first and foremost. I got involved in business from a pretty early age. I was involved in running my own stuff from about the age of 18. So I learned a lot of lessons along that way. Then it was my own education through doing my own research, whether that be YouTube, reading other books, or listening to other educators. And I'd say the most real high value stuff that I've got in for the last year or so would be from yourself and Mr. Tom Williams, for sure.
Okay. So how I learned money was off my mom and dad. Now, to put this into perspective, my mom was a stay-at-home mom. Now she worked in a bank till she became pregnant, and back then she was the woman, so she had to stay at home. She was now a baby making factory, and that was it. I mean, that was her life finished. So we ended up I have 3 brothers and a sister. So, 2 brothers and a sister. So there's 4 of us all together. So my dad was a laborer. He worked on farms, he worked on building sites. And so because where we're from, there wasn't huge amount of money to make from you literally had maybe 2 or 3 days a week that you were working. And that was it, because we're in the middle of the countryside. There's no work going on. Farmers didn't really have money because they were just sheep farmers. So it wasn't affluent. So it means then that who I learned from money was my mom and dad. Now, were they good at money? Absolutely not. The one was a stay-at-home mom and the other one was a laborer. So, and that's the problem. There's nothing in school to teach you about it unless you go to uni, and then there's a small curriculum on it if you do economics. But other than that, no one ever teaches anyone about money, about how to make it, how to invest, where are the best places. So where do we go nowadays? Instagram, YouTube, and then we end up looking at people. Yeah, but whatever about the likes of myself is like I give people stuff that works. I give people value. But you have the likes of the guy that has scamming, put my name there with an extra R and stuff like that there. People come in and follow him and not follow the likes of that. And then he goes, oh, if you give me some money, I'll trade your Bitcoin and all that sort of stuff. And then people get scammed, and there's such a scamming market in finances out there. And once you get in and find someone that's good and authentic and you actually can relate to them, all of a sudden it just blows your mind. It's for instance, our clients, the minute the pandemic happened, I went on and harped about an index tracker. Now, anyone who got into an index tracker is about 50 to 60% up this year alone on an index tracker if they had have taken it back then after the pandemic. So what's that? Literally a year ago now, literally over a little bit of over a year ago now. And they're up 60 to 70% on their investment. So it's little things that all of a sudden, forget about stocks, forget about everything else, just buy the index tracker and walk away. And all of a sudden then everyone is up massively. Then we start focusing back on the stocks that they're on, or the crypto that they're trading, or even if they want to go into some bonds or anything like that. So it's taking that steps. Go do it. If you haven't got an index tracker, go get one. Now, there's equivalent to an index tracker. I know you guys trade on eToro. You can buy an ETF of the S&P, and the ETF for the S&P, go get a pen, write this down, is the SPY. Okay, so that is an index tracker or an ETF for the likes of the SPY. And if you want to go tech route, which is the NASDAQ, you have the QQQ. They're the index trackers, and just buy them. The NASDAQ over the last 10 years has returned 15% a year. The S&P has returned 10% a year for the last 40 years. Has your investments done more than that over the last 2 or 3 years? If they haven't, stop trading, put it into either of those two, and just walk away.
It doesn't get more simpler than that. It doesn't. The barrier to entry is so small, and I think this is why people like yourself are so important right now. I think that kind of marries things up really nicely. the education wasn't there. I didn't get this education from my parents, nor did you. I didn't get it from school or anywhere else. And I had to independently go out there and avoid the dickheads, avoid the scammers, and then find people that can give me this information. And when the information does present itself, it can be so much easier than people were led to believe. Now, this is where it comes really important about what you're teaching people. So I'd love for you to tell people a little bit about what it is that you're doing, the types of courses that you run to give people that education so they can be ahead and actually take advantage of the opportunities that are out there.
Yeah, so I used to work for an education provider, and what they would do is they would charge people $2,000 for a beginner course. So the free course that's on your platform that we've given people, they would charge $2,000 plus the VAT. So just about $2,500 they would charge for something similar to that. Now, then when you come in and do that course, they would then pitch you a $20,000 product that they would teach you how to trade more advanced stuff with the other courses. Now, the beauty of the likes of what you guys are doing here and then what I'm doing is that you don't have to pay extortionate amounts of money to learn how to do this. The idea is that you pay a little bit of money, or the likes of you guys with a subscription, a little bit of money every month, and all of a sudden you learn actually how to make money. You educate yourself. Whereas with previous companies, they charge huge amounts of money, extortionate amounts of money, and then you have to do it. And you then how many people fall off the bandwagon and then pay for stuff and then don't do it? There's loads. And the difference is that you're paying a huge amount of money. And this is where myself and you guys have sort of teamed up, and we're putting together sort of a course for you. So you have the free one. Now, anyone who wants to come and do my advanced training, you have to have done one of the courses. Now, ideally, you would have done my course. If not, you would have to have done Tom's or some other course on investments, so you actually understand the basics, or you would have had to have gone through sort of my webinars every month that I'm doing them, so you actually have an understanding of what I'm doing. So that's one of the first things. That's the first criteria. You will not be taken on board if you haven't done the likes of that. But what I do then is I go into much more detail. I go into how to read the charts. Now, I'm talking about trading, but when I say trading, I mean trading as in investing and trading. I will give both of those arrows so you can put them in your quiver. I will teach you how to invest and I will teach you how to trade. Because let's be honest, looking at a stock, making sure it's going up and pressing the buy button, that's not hard, is it? That is not.
Apparently not, Mr. Ward. I think you made it very clear that it can be done very easily.
That's not hard. So the idea is to give you an extra arrow for your quiver. So it means then that you can actually trade as well. So when something actually presents itself, like on the webinar, on the Tuesday webinar there, I had the likes of Ashted Group to come up, and literally within 2 or 3 minutes of looking at it, I've done all my checklists. So I have a five thing checklist. Is 1, is it trending? 2, has it got 2 clear cycles? 3, has it got highs and lows? Or if it's a downtrend, lower highs and lower lows? 4, is it bouncing off support and resistance? And then number 5 is price action. If it meets all those rules, I will take the trade. I do not care what the PE ratio is. I do not care what the bank balance is. I do not care what the liability, the debt sheet, any of that stuff is. But I'll go into that and show you how to do all that sort of stuff as well. But I'm going on trend. Remember I said trend continues 60% of the time? Well, there are people who are far smarter than me who have gone through the PE ratio, have gone through the debt sheet, gone through liabilities, gone through the book value, gone through all that before I've done it. And that's where the trend has started. Okay, and that's the idea. And then I'm jumping on going, okay, and now I'm picking the points out that I'm trading. And that's the idea. So I'm jumping in and out of these trades, whether it's on a pivot points, whether it's on 2 clear cycles, whether it's off of support and resistance. And all this stuff is added to an extra string to your bow, an extra arrow to your quiver. So I teach people and I take them full cycle from knowing what the chart is doing, trending, and then going into much more minute detail. So going into chart patterns, going on when we see a chart pattern, what would expect to happen next? Or if we're looking at the higher time frame, so the higher time frame is telling us one thing, and then the lower time frame is telling us another thing. Well, if that's the scenario, we forget about it. We get rid of it. So we're adding extra confluences to what we're doing. So making sure the higher time frame and the lower time frame are agreeing with us. And then after agreeing with us, then we can jump in and trade. And if this is your first trade on this particular asset, I sometimes take 2 trades. So I buy the underlying asset with 1%, and then I would generally buy a CFD with 1% as well. So if the CFD stops out, it's not the end of the world. I still have my underlying asset still running on that particular trade. But the idea is that when you're trading the CFD trades, you have the risk to reward there. So basic maths. I'm going to test your maths now. You earlier on said you're a mathematician.
Fucking hell. Yeah, it was when we were talking about the difference between 25% and 60%. I felt pretty confident on that one, mate.
Well, it's 20 and 60, not 25.
So I fucked it already.
So so if you're taking 10 trades, okay, and you have 7 losses at 1%, how many losses have you?
7%.
Perfect. So you've lost 7%. So that means out of those 10 trades, you've lost 70% of the time. And you have 3 trades that win 3%. How much have you won?
I'm up 2%, my friend.
Perfect. So you've made 9%. So 7 from 9 is 2. So you have plus 2. And just imagine that 1% was 100 quid. That means you've made £200. If it was £1,000, it means you've won 2,000. If it was 10 grand, you've made 20 grand. So the idea is that the psychology, even though you've lost 70% of the time, you've still made 2% profit. Okay. And if you make 2% profit a month, that's 24% at the end of the year. If you can do that a week, all right, there's 52 weeks in the year, that's 104% by the end of the year. You know what I mean? And it's simple little things. If you can do 1 trade or 2 trades a week and they're profitable, then it's a go from there. It's a win-win situation.
Yeah, that is a powerful concept when so beautifully articulated. And my maths was great.
Yeah, well done. I was just looking at my success rate on trades. I have a 57% success rate with my trades. So again, I don't have this all of a sudden I'm 100% successful with my trades. I don't. I have a 40% lose rate with my trades. Okay, but again, my wins are bigger than my losses, and that's the idea. Is you always have that. Now, I was a little bit annoyed with the Ashtead group. I was really, really annoyed because on the group, so on the Discord group, I'm going, guys, I'm part closing this trade. So what I do is once it hits the 3-to-1 profit, I part close it. I move my stop loss inside break even. And then if the trade continues to run, let it go. And that's what's happened with Marks and Spencer, or not, Morgan Stanley. I'm now 7-8% up on the actual half trade that I've run in. All of a sudden, it's gone on from strength to strength, and I expect it to still go for another 3 to 6 months. So it's exponentially, because it's a CFD, it's exponentially making me money. So, and with the Ashtead group, because I'm trying to be a little bit of an influencer and a YouTube guru and all that sort of stuff, I was at my friend's house the day that it went and hit the 3-to-1. So I done a little Instagram video about it, little reel. Then I done a little TikTok video about it. But I wanted to do a proper YouTube video for about 10 or 15 minutes on how to par close a trade, how to manage it, stuff like that there. But I didn't have my laptop, and I didn't really want to do it on my friend's laptop, so I left it. So then I got home the next day, the market was closed, so I couldn't actually do that. Woke up the next morning and it had dropped down 50 quid. I'm like, no, I can't. I need to wait for it to be at 300 because it's a risk in 100 quid to make 300. So that means that I need to wait for it to hit that. And it just dropped. It's now at about 196. So this is a week ago, and I still haven't par closed my trade because I wanted to do it live on a recording so I could give the education to you guys. So it's actually cost me money giving you education.
Great. So you're making me feel guilty here now, Henry, for fuck's sake. So basically what you're saying is you're losing money and you're going to have to go back to being a carpenter, all because you wanted to give us the fucking money.
Yes, this is the plug for anyone anyone who wants any chippy work, let me know.
Yeah, he's got some tables that he needs to build.
Roofs on houses, studs, joisting, you know what I mean?
Yeah.
Any timber frame, anyone, any extensions, let me know.
I am not your man for that job. I cannot even put up a shelf, Henry. Jesus Christ. Do not give me manual work is not my thing. I was sacked from quite a few building jobs in my teens for good reason. I was a danger to myself and everybody else around me.
Yeah, I can imagine that. I remember being on the building site one day and we had these nail guns and the ground workers come in and we were outside, which was a little bit lower than where they were inside, and he was nailing the timber together. And all of a sudden I could hear ping, 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 ping. And I could feel it burning at the back of my head and I go, what's that? Down, and it was blood on my fingers. So the guy had shot the timber, but he'd missed the timber. It'd come up and caught the back of my head and I could hear the nail banging across the ground. And I'm like, put that gun down now. He just shot me in the back of the head with the gun.
That would have been me. No one was stupid enough to give me a nail gun. So I suppose nobody died, luckily.
Look, it was funny at the time, but it was like looking back at it now going, oh, he could have killed me stone dead.
Well, it's a damn good job that you're now a stock trading man, Mr. Ward, because it would be a sad, sad shame if you were to take a nail to the brain and deprive many of the students at Platinum University and the rest of your students of your insights.
So just to give people a little background, it's like, I don't have a degree. I don't have, I'm dyslexic. So anyone who ever gets a text message off me or an email off me, you will, is this in pidgin English or is he a foreigner or did a child write this text message or email? I'm dyslexic. So words being jumbled and writing together, that's my worst nightmare. But I was a qualified carpenter and I was very, very good at it. The credit crunch meant I just changed career. The same with trading. I got in on it and I became very, very good at it. I'm just people show me stuff and I just pick them up very quickly. And this is all I'm doing is showing people how to do this. I make money myself and it's trying to show you guys how to take control of your finances. And it means the idea is to get you to retirement age that you do not need to be banking on the state pension. That's the idea. Now, that
is epic.
Now, with trading, the idea is to, instead of having been set up by the time you're 65, is bring it down to 60. And then with a little more trading is bring it down to, say, 50 years of age. And then with a little more trading, you can hopefully bring that down to 45. And then we're slowly trying to bring that age down lower of how to retire, how to be at a position where you don't need money or don't need to work anymore. And that's the idea. So it started off at retirement age and then slowly bring it down. And
that my friend, I think is the perfect point to end on, because that I think that was your mic drop moment. I think you just had it right there. I think that was it. I would love for you to tell people, you already got it in there, and rightly so. Where can they find you, my friend? And where can they find what is already available in terms of your courses, your content? And if you can just give a run through as to what you're going to be offering in the near future, because I know you've got something pretty exciting lined up for everybody at Platinum University as well.
Yeah, so there's loads of places you can find me. You can find me on YouTube as Henry Ward. You can find me on TikTok, henryward.trading. The same on Instagram, henryward.trading. You can walk onto my website there. We also have everything that I have on my website is also on the Platinum University. So you actually have it there in the stock trading room. So it's just below Tom's course. I had an argument with the guys. I wanted above Tom's, but you know what I mean? It is what it is.
Or maybe we can have like a duel, like you and you go head to head and throw that.
but again, it's all there for you guys. So that's the basic. That's getting introduction. That's come in. I will also see you on tomorrow on the webinar. So once a month I do a webinar with Platinum University. But then also what's coming forward is I'm doing advanced training for you guys. So we're looking to do either a 10 or a 12-week program for you guys. So putting it together, bringing you guys from doing either Tom's basics or my basics to actually bringing you to the next level, getting you to a point where you understand what's going on in the market, to get you to a point where you can trade sort of derivatives and the underlying assets. So that means then once you see the perfect trade setting up, you can go, oh, am I going to trade this as an underlying, or am I going to trade this as a derivative? So derivative will make you 5 times more money than the underlying. And that it just means that you have that decision to make at that particular time if you're happy with this trade. And that's all we're trying to do here. We're trying to get you to a point where you can take control of your finances. You can get to a point where you're happy with everything. And if you lose your job in the morning, that you're not worried anymore. That's how many people have lost their job and then they're like, oh no, what am I going to do? What am I going to do? I've rent to pay, I've kids to pay for, I have this to pay for. That if something happens in the morning, that you are absolutely fine. And that's what this education is trying to get you to. And that's what it is. So if you're interested, let the guys at Platinum University know, let me know. It is exciting. It's absolutely brand new, just literally for you guys. It is not being offered to my clients. So it is exclusive for you guys.
And that is Mr. Henry Ward coming in hot at the end. Man, I think that was absolutely great. I think it was just insane value for everyone. I just want to thank you for being part of our platform as well, man. Like, I really enjoy your content. I know our members get insane value, and what you're doing in terms of educating people when it comes to money, finances, and what you just beautifully articulated there is you're also creating that level of security for people in ways that most people don't even know is possible. And I think the kind of level of peace of mind that that's able to provide for people is just really, really powerful. So I just want to thank you for being a part of Platinum University and for doing everything that you do, man. I really appreciate you.
Thank you very much and have a lovely day.
You too. Thanks for coming on, man. That was great.
Bye-bye.
I was sick. Hey.
Happy enough for that?
Yeah, it's fucking good, man. Really, really good. Fucking just at the end, my laptop was about to die and I've only got 2 sockets. I was like, fuck, I need to unplug the mic. Luckily, you went on a good little rant. So I was able to swap it over. I was like, it doesn't need to listen to me. It's great. Yeah, that's quality, man. Really, really cool. Enjoyed that a lot. Oh, all right. Good chat. It's about time we fucking did. You've been working with us for about a year now. We've had one half abusive conversation about a website on a website. I feel like every time I jump on it, I'm just taking the piss all the time. That's just kind of my nature.
Yeah, so. But it's great. That's what I like. It's just you know where you are with people when they're having banter. It's just you get to take piss out of people.
Exactly. Fucking, I'm glad that you appreciate that. We had this problem. We had a girl called Danny who worked for us, and she wasn't quite on that level. It was a little bit. There's nothing wrong with her. Lovely girl, but it's just not a good team fit when like people get a little bit offended and like it's just. Can't operate like that. For us, we need that kind of look. Banter. I'm going to be open, honest, banter, but like if there's something that needs to be said, like I like knowing that someone's just going to tell me how it is. Like I will always say, Henry, what you did the other day pissed me off. I don't like it. Joe, what you did the other day pissed me off. I don't. I love to be able to just like operate like that. It's the only way.
Oh, absolutely. I generally get Henry. I'm too blunt. I'm too straightforward. I need to. I remember when I was at eToro, we had signed a signal provider, and he was sending over clients. And so the first month we paid him 70 grand in signals. Then the second month we were paying him another sort of 80 grand. But looking at his first month's people, a lot of people were cashing out. So then they were like, oh, Henry, well, can you have a chat to him? Can you have a look at him? I don't think we're going to pay him. And I was like, well, what do you mean you're not going to pay him? Did you or did you not sign a contract to say that every client you would send over, you'd give him, say, 350 quid and you now owe him 80 grand? Fucking pay him the 80 grand. Well, sorry, I didn't say fucking, I said pay him the 80 grand. It's not rocket science. You sign the contract, pay the man. Now, anything moving forward, I can have a chat to him and potentially lower the rate. I can do all that sort of stuff. But because you have now signed the contract, you need to pay him the 80 grand, and then moving forward, then we can work on something else moving forward. But just pay the man. It's not rocket science. This was to the head. This was to the head of affiliates, global affiliates in eToro.
He should know better. Jesus Christ, I'm glad you told him straight. It's like, look, just if you made a bad deal that doesn't suit you, that's your problem. Deal with it. Deal with the consequences of your actions. do what you said you were going to do, have some integrity, and if you want to change the deal moving forward, by all means do that. But
absolutely. But then my manager put me to one side. She goes, "Oh, Henry, no, you can't sort of send messages like that. So when you're angry and you're a little bit annoyed, write up an email, send it over to me. I will rewrite it for you and delegate it, and then send it back to you, and then you can send it."
yeah, I have that exact arrangement with Lewis. Lewis will be like, I'm like, Lewis, mate, you can't send that, mate. Like, we need to take a minute. You cannot send that. Like, that's not okay. I agree with the content, but the delivery, no, we can't do that. Oh, it's fucking funny, man.
Yeah, that's good. Well, look, mate, I will leave you to it. I have another session now in 15 minutes. So I will chat to you later on. It's been a pleasure and hope you have a lovely day.
You too, man. Really appreciate it.
So this call tomorrow, do I need to be on it or do I not need to be on it?
I'd love to be on it. We want to have just once a month. We want a set day where all of the mentors are on, just so we can bounce around ideas and just generally all level up because everyone's doing the same.
What time is it on it?
You're asking the wrong person. Despite being the co-founder of the company, I don't fucking know. It will be Lewis is your man. He organizes the calendar. I don't know my ass from my elbow.
Okay, cool. Because I have a few meetings tomorrow.
Let's see what's possible. Look, end of the world. If you can't make it, I'd love you to be on it because I think it'd be good for everyone. Because everyone has different teaching styles and stuff, and I think it's good to bounce some ideas around for everyone to get better.
Yeah.
Also, because of the company, I think it's a good point for everyone to actually know each other because that's one thing as we grow. There's becoming more and more like distance between people, and it's good for everyone to know each other.
Yeah, cool. Makes sense. All right. Well, I will reach out to Lewis and see if the time suits up. Okay.
Beautiful. Enjoy the rest of your day, mate. Thanks
you too. Bye-bye.
Yeah, mate. Bye.
This is the Platinum Podcast.